Hey everyone! So, let's talk about something that's been buzzing around. Tariffs, trade wars. Sounds complicated, maybe even a little depressing, right? Stick with me though, because understanding this stuff is crucial for your money. Yeah, we're going to get into the nitty-gritty, the potential headaches, but I promise you, there's also a flip side. There's optimism, there are smart moves you can make, and we will get to that. But first, we gotta understand what we're dealing with. Grab your coffee, let's break it down, simple and plain, and figure out how it connects to maybe even chasing that dream, like that little place somewhere sunny, maybe Italy? Alright, so remember Donald Trump talking about bringing jobs back, making America great again? Part of that plan involved slapping new taxes on stuff coming into the US from other countries. Those are tariffs. Think of it like a toll booth at the border. Imported goods have to pay extra, maybe 10%, maybe 30%, or even more for certain countries. The idea? Push other countries to buy more American stuff, play fair. Sounds simple enough. But like always, the devil's in the details, and it's way more complex than it looks. And understanding why it's complex is the first step to figuring out how to protect yourself. Here's the first thing you absolutely need to grasp. Today's world is nothing like it was 50 years ago. Think old movies, giant American Cadillacs, pure Detroit steel. Then you had tiny Italian Fiats, 100% Italian. Two different worlds. Forget that now. That American car you buy today? It's a global citizen. The engine might be Japanese, the transmission French, the design Italian, the electronics Chinese, all assembled in Mexico. So when someone says, let's put a tariff on cars from Mexico, who's actually paying? The Mexican worker? The Japanese engineer? Or the American worker who made a part before it crossed the border? See where this gets tricky? A tariff today isn't just a border tax on a finished product. It's like throwing a wrench into a massive, globe-spanning assembly line. Everything's connected. Think about your iPhone. American company, right? But it's assembled in China from parts made everywhere. Taiwan, Korea, Japan. The real value, the design, the software, the brand, that's created right here in the US in Cupertino. Most of your money goes to American brains. So tariffs on imported parts? They can actually hurt Apple and maybe make that phone cost you more. We hear it all the time. Tariffs protect our jobs, our industries. Sounds patriotic. But does it actually work that way? Let's pull back the curtain because the reality might just surprise you. Think about a huge American company like Mars, making candy bars right here. They need cocoa beans, mostly from Africa. If you put a tariff on imported cocoa beans, Mars has to pay more. Their candy bars get more expensive. Maybe people buy less. Mars makes less profit. And guess what? Those American workers at the Mars factory might not get a raise or worse, could face layoffs. Crazy, right? American exports, like candy bars, depend on American imports, like cocoa beans. Okay, so tariffs mess with how things are made. Maybe they don't protect who we think, but why should you, sitting at home, really care? Well, this is where it hits closer than you might imagine. When the biggest economy on Earth, that's us, the US, about a quarter of the whole world's economy, starts playing tariff games, it sends ripples everywhere. Like a rock tossed in a pond. If global trade slows down, factories worldwide make less stuff. Companies earn less profit. Demand for raw materials like oil and metals drops. People get laid off. Laid off people spend less money. Demand drops even more. It's a downward spiral that can lead to a global slowdown, even a recession. We saw supply chains break during COVID, shortages, price hikes. We remember the 2008 financial crisis. Started here, hurt everywhere. But remember, every storm eventually passes, and downturns often create the best opportunities for those who are ready. Tariffs aren't a natural disaster. They're a policy choice. But they can slowly squeeze the global economy, creating long-term pressure. This uncertainty is exactly why we need to be smart and flexible. All right, enough global economics. Let's talk about something more fun. Maybe that dream of owning a place somewhere beautiful like Italy? With all this uncertainty, maybe it's a good time to buy property there? Maybe money flows to safe havens, pushing prices up? Hold on. It sounds nice, but let's get real. Italy is amazing, history, food, beauty. But its economy relies heavily on exports. Fashion, cars, wine, cheese, all things potentially hit by tariffs and trade disputes. Plus, Italy has its own economic challenges. So, what really happens to real estate in times like these? Before you jump into that dream, you absolutely have to know the potential pitfalls. Ignoring these could cost you dearly. Let's break them down, but also talk about how to navigate them. First risk. Weak economy equals weak demand. If Italian export businesses suffer, layoffs happen. People have less money, less confidence. Are they buying houses? Probably not. Demand drops. Same for offices, shops. Even tourism can take a hit. Weak demand usually means stagnant or falling prices, not a boom. We saw it in 2008. Your move? Focus on prime locations less tied to one industry. And crucially, have that cash cushion, your emergency fund, so you aren't forced to sell low or panic if it takes longer to rent out. Second risk. Money gets expensive. Tariffs can fuel inflation. Central banks fight inflation by raising interest rates. Mortgages get pricey. Fewer people can afford to borrow and buy. Demand cools. Your move? If getting a mortgage, try locking in a fixed rate. Better yet, aim to buy with cash or a large down payment to minimize debt. Less debt equals more flexibility. Third risk, building costs more. Tariffs on steel, lumber, etc. make construction more expensive. New homes cost more. Your move? Consider quality existing homes where location is key rather than just brand new builds. Fourth risk, uncertainty and delays. Hello, 90-day wait. When things are shaky, investors pause. The market can freeze up. And here's a nasty little surprise you might encounter. Imagine you find your perfect Italian villa, agree on a price, and then you're told there's a mandatory 90-day waiting period before the deal can actually close. Maybe it's new regulations, extra checks, who knows? But for 3 months, your money is tied up, plans are on hold, stress levels rise. This makes an already illiquid market even slower. Your move? Factor potential delays into your timeline and finances. Don't invest cash you might need urgently. Work with reputable local lawyers. Uncertainty scares many, but for the prepared investor with patience, it can signal a time to look for value others overlook. Okay, enough risks. Are there any opportunities? Yes, but I know that sounded rough. But remember what I said, there's always opportunity in chaos if you know where to look and how to play it smart. So any upsides here? Is Italy a safe haven? Not exactly. The idea of money flooding into Italy is too simple. Yes, property can be a safe haven, the IMF says so, history shows it. But if the whole world is shaky from trade wars, true safe havens shrink. And Italy might be more exposed than, say, Switzerland. Don't blindly trust the safe haven label. A chance for the patient and prepared? Absolutely. This is more realistic. Italy's fundamental appeal isn't going anywhere. If prices dip due to temporary panic, a long-term investor with cash ready and nerves of steel might snag a great property for less than its true worth. It's precisely in times like these, when others panic, that the smartest long-term investments are made, if you have a plan and resources. Think niche projects too, maybe a small B&B? But it's a long game, not a quick flip. Quality shines through. In uncertain times, people gravitate towards quality. Well-built homes in great locations hold value better. Your move? Invest in quality, even if it costs a bit more upfront. A shift towards renting? If buying gets tough, more people rent. Could be good for landlords, but depends on the local job market. Your move? If buying to rent, do your homework. Calculate realistic income after all expenses and potential vacancies. So what does this all mean for you? Forget the easy answers. Tariffs are messy. They won't magically make your Italian dream investment skyrocket. They create uncertainty and risk. But that doesn't mean you hide under a rock. It means you get smart, you get flexible. What can you, the average person, actually do? First, your emergency fund is your shield. Before any investing, especially something illiquid like property abroad, make sure you have 3 to 6 months of living expenses saved in cash. This buys you peace of mind and options. Second, keep debt low. High debt makes you vulnerable in downturns. Avoid it, especially high-interest debt. Third, don't bet the farm. Thinking of investing? Diversify. Don't pour all your savings into one property overseas. Keep some money liquid like savings, CDs, maybe low-cost index funds. Spread your risk. Fourth, play the long game. Real estate isn't usually a get-rich-quick scheme. Be prepared to hold for 5 to 10 years or more. Patience is a strategy. Fifth, focus on fundamentals. Quality property in a good location is your best defense against market swings. Sixth, expect hurdles. Remember that potential 90-day closing delay we talked about? Be prepared for bureaucratic hoops and build buffer time into your plans. Seventh, stay informed and adapt. Keep learning, read widely but critically. Understand the local market you're interested in and be ready to adjust your strategy. Uncertainty is part of life. Always has been. The key is not to panic, but to plan. Understand the risks, look for the real opportunities, have a safety net, and stay flexible. Tariffs, politics, recessions, they come and go. Your common sense, your preparation, your ability to adapt. That's what truly matters. Be informed, be smart, stay flexible, and believe in your ability to navigate whatever comes next. You got this. Good luck.